Good morning, traders. Welcome to StockCast. My name is Todd Derby, along with co-host James Mason, where our goal every day is to bring you some insights and ideas into your daily trading activities. But honestly, you don't need us. You just need to buy SPY calls and just sit back and let Jerome Powell do his job. Good morning, James. How are you doing?
Todd, I'm doing well. How are you today?
I'm doing well.
Man, I hate the stock market. I hate the stock market.
You hate the unpredictability and the unreliability.
No. It's not the unpredictability. That I love that. That's what I seek to figure out. It's the manipulation. I mean, Jesus, like. Let's just look at the daily chart for the S&P 500. So this crap is not normal. This is showing breakdowns over and over and over and over. But no, the freaking Fed just keeps coming in and propping the market up. And I fully believe that they're just going to prop it up until Christmas. That way everybody has their last bit of happiness in life before they crush their 401ks. Next year, 2022, and after they have a good Christmas 2021, well, they're about ready to take everybody to the woodshed. It's just unfreaking real. Like, Jerome Powell and the Fed, they're not doing any daggone tapering. No, they're not. That's all freaking BS. They're still holding the market up. And yesterday proves it. I mean, I don't know. Any thoughts or comments on it, Todd? For me, it's just freaking aggravating. You know, like, they can do all the manipulation in the world, and it's okay. That's the name of the game. But geez, you come together with a group of people and start talking about how you want to execute a trade to influence it, man, the SEC will freeze your assets, shut your accounts down, fine you out the ass.
So the thing that confuses me the most is that how the market is responding to the news that he's giving us. Because the retail traders, I believe, were heavy on puts and looking for a dip in the market. And they got smoked yesterday. They got smoked with this SPY running up. So who's responding to this news to push SPY? That's the part I can't understand, because it looked like everyone was on the same side of that we were going to see a dip in the market. So that's the part that was most confusing to me.
I believe what's going on is, you know, they see the retail traders stack up to one side. I don't know if I want to say sooner, quicker, whatever it may be, or I mean, when I say sooner or quicker before institutions actually stack to that side first. And then they're just like, oh, nope. Retail, they're all stacked up on the put side. You know, we're not heavy on the put side yet. So they're trying to jump the punch before we're there. So let's smoke them. Let's kill their premiums. Let's make the market go up. They'll cover. And when they go buying calls again, they'll get heavy on the call side. Then we'll go heavy on the put side and just pull the market out.
Yeah, it's crazy. So I wasn't on SPY. I wasn't on either side of it. I was trying to avoid at a late day trading yesterday because I didn't want to get caught in something with the market doing something stupid. So I feel bad for a lot of people, because I know a lot of our members had puts, because I saw them talk about it in their chat box and other places. So I felt bad for them, quite honestly.
Mm-hmm. Like I mean, I didn't even lose in any of this. I did not lose at all. But it's just aggravating, man, because it's all the freaking lies. I guess this kind of goes a little bit deeper than just Jerome Powell. Maybe Jerome Powell is my punching bag right here, but it's like I made a Facebook post yesterday and talking about how when I was filling out the vendor application agreements for NASDAQ, and how when my account was approved, they actually approved me for the institutional side. So I get to see all their APIs, and I was digging through them. And the access that they have to the data that I've been trying to figure out how to honestly create for some of the stuff that I want to make. Man, they have access to all of it. And you cannot get access to it as a retail trader.
And you called me and you were excited about what you saw, and you were super bummed that they pulled it from you.
Yeah, they deleted my entire account. It wasn't long. They deleted my entire account.
They said, James Mason's not an institution. He's not in the tree fort. Kick him out.
Pretty much. But yeah, NASDAQ has, if I'm not mistaken, there are 268 APIs that they have. Of just honestly the best information. What I think is the best information, just from reading their descriptions. I mean, they literally have an API that can tell them what the live float is. And if you don't understand the significance of that, man. So I know I won't be able to figure this out, because it's impossible due to how much they restrict information from us. But I've been trying to figure out how to create a live float. And I know a lot of people can try to say, oh, you can use this indicator, that indicator. No, you guys are wrong. I ain't talking about doing no half-butt monkey business crap. I'm talking about truly understand what the live float is. All the data that we get, that's old. That is so old and so inaccurate. It's irrelevant. Anytime, if you look at any of these stocks and it talks about their float, that float, if you're lucky, it will be updated annually. Did I just?
You're good. You're good.
Okay, I didn't know if I mispronounced.
No, you're fine.
Okay. I literally, my mom went and freaked out. Did I just say a certain word?
You're fine. You're good.
Okay, cool. All right. So if you're lucky, they'll update that float annually. And other than that, usually when there's like a share structure change, and that's if you're lucky. But they actually have an API that updates them for a live float at the end of every day. And man, can you imagine the freaking trades that you can make if you knew how much the float was every day? How many shares were truly left out there on the market available?
It's a cheat code. It's a cheat code.
Yes.
There's no way to say it. It's a freaking cheat code.
Yes. Just live. Put it this way, guys. The significance of understanding an accurate float. If we knew at the end of every day, well, okay. So if the masses had this information, this wouldn't work. I'll be honest. I mean, it would kind of work, but the moves would happen so quickly. They would just figure out another way to manipulate it. But I was just trying to figure out how to know this information because no one has figured it out yet. Well, obviously, they do know it because they control the game. They control the banks, all the brokerage firms. They can see what's owned everywhere through all the clearing firms and whatnot. But you wouldn't even need indicators anymore if you just knew what the live float was. It's just that simple. And that's just one of the many APIs that they have. I mean, it's just unreal.
That's just one of 268. So definitely a full room of cheat codes and that's why it's so difficult for us to fight the institutional trading in Wall Street.
Mm-hmm. And yeah, I don't know. It's just aggravating. There's no fairness or transparency in the market, regardless what the SEC says. The SEC, they're a bunch of crooks.
And when you started talking about your Facebook post, I really thought you were going to talk about getting bit by a camel. That would have been more entertaining.
Yeah, I got bit by that camel last night. All right, let's talk about some stocks. So, what does everybody have eyes on this morning? Let's see.
In the comment section, good morning, good morning, good morning. Space Milk 6 is referred to a ticker called unpredictive oncology. There is a little bit of humor in that. I like that. Appreciate that.
Let's see. Man, the stinking pre-market has just been kind of dead lately.
This whole week is. I mean, it's been a slow month for December, but it's even this week's even been worse. And I don't know if it's because the FOMC meetings had people on pause, but it's been slow. It's been a slow.
Yeah. So, Derek, no, I have not seen that email from that guy. I'll have to look into that. Actually, I do have a meeting today with predictive oncology. So we'll have to see how that goes. Man. Y'all are a bunch of nerds throwing up Apple and Microsoft. Of course, everybody looks at Apple and Microsoft every day. Can't even call that out as what you're looking at. Everybody looks at Apple and Microsoft.
That's funny.
That used to be like bad a couple years ago, where a lot of the internet traders, they were like, keep eyes on Apple tomorrow. It's going to move. I have a feeling. Yeah, no crap. It's going to move in both directions. Apple always moves.
Trades a couple million shares daily.
Yeah. Let's see. Oh, so yesterday talking about the market pulling back. I had puts in both XOM and OXY. And let me when I went ahead and covered on those puts to take profits, which were it was such a smooth trade for both of them yesterday, for Exxon and Oxy. This whole just drop. I mean, it was couldn't ask for a smoother trade. But anyways, man, when I saw this thing just like dropping like this, and I looked at the RSI, I mean, it was getting hammered. And I could just see that momentum dying out somewhere right in here. And I went ahead and tweeted out to everybody that, I'm taking those profits. And man, I'm glad I did, because boy, what a freaking bounce that the entire market had, especially oil. Let's see. Well, hold on a second. I just saw something shift on my scanner.
I've got them up on one of my screens also.
Okay.
They're out of money.
Ah.
And they have warrants. They have a warrant pending. They've an exercise price at $11.50. So if they're out of money and they got some warrants here, they could run this today.
All right, so the ticker we're talking about is ticker SNAX. So on the top of their news, it's just basically saying that they
A deal with Costco.
Yeah, Costco and looks like Walmart distribution. Which, and that's just all that is just fluff articles. But anyways, they have 8.7 million shares outstanding. Currently up 22, almost 23%.
I'm showing the float around 7 million.
I have about 5.7 for the float on my end.
Okay.
That's why I don't ever go by float.
What are you showing for outstanding shares again? I have 15 million.
So what I'm seeing for outstanding shares is 8.7 million.
Okay. But the most important number, so it's one of those two or between there. This is a highly held institutional stock. Institutional ownership is between 50 and 60%. So if they run it, it'll run hard, I think.
Man, like what I'm just concerned about is, man, that downtrend. This thing's been downtrending for half the year, and that's a hard downtrend. There ain't no telling how many bag holders are in this. So to get past all of this, that's gonna be challenging
in a slow, crappy market.
Mm-hmm. Bears are gonna be all over this. I mean, it hasn't really gapped up too much yet, but if this thing actually does something and really gaps up, like the next 10 minutes, man, it'd be a prime candidate to short. That's what I'd just be concerned about. I saw it flicker on my scanner, but yeah, I don't really see a bullish case yet. It's just not. Yeah, I'm not feeling bullish on it yet. I'm not really liking it. Man, I was hoping to have something there. All right. Yeah. Man, I feel like I'm just like grasping for straws with these pre-markets.
Yeah, there's not much here. There's not much to chat about. We're under 9 minutes to the start of the market. There's just not a whole lot there.
Yeah. Let me look up Docu really quick. A request. Ticker DOCU. See what DocuSign has going on. Ooh, man, that major gap down. Honestly, I'm bearish on DocuSign. So, I mean, we're going to see whatever little BS bounce right in here. I mean, it's going to fake a lot of people out as it starts to go up. Everybody's going to start to say, oh, it's going to fill the gap all the way back up to about 230. Nope. This thing, it might push up, but it's going to get rejected somewhere right in here, and it's going to tip over again, and it's going to want to go down here and test somewhere going towards just lower tip of this Bollinger Band line. Like literally, I would call it a target price of around 99 to 101, somewhere in that range. Now, I don't know how long it would take for that drop to actually pull off and happen. So if this is something that you guys were going to trade later, whenever that setup actually did take place, whether it be the break below of this low right here at 131.50, or if you saw it come up here, get rejected, maybe off that 9 EMA. It's hard to tell because we haven't seen the setup yet, but maybe off that 9 EMA or possibly off that middle Bollinger Band line. But as it rolls over and drops more, you just have to be cautious of how much time you have left on those put contracts. And also keep in mind that whenever the Fed decides to pull the rug on the market, the spreads on your options are going to get very screwy. They're going to do whatever they can to just make you lose money. Even like you could have puts and the market's dropping, and if they can make it to where you're losing money on your puts, well, that's the name of the game, guys. So enjoy it. I mean, that's really all you can say. But yeah, just make sure. I can't give out any advice because obviously I'm not a financial advisor, but in my personal experience with these events that are taking place or soon to be taking place, or could potentially take place, where I found my best success is taking smaller position sizes and extending the time frame on those contracts if you're going to trade options. That's what has helped me out. Now, it's not going to, that alone is just not going to make your trades be winners because there's still so much else that goes into it. But smaller position sizes, especially with this market, it's going to be the difference. It's going to make the difference in if you're actually still here as a retail trader come in the summer of 2022. That's just the truth. I was
going to say, when you're taking your positions, it's better to sell early than to sell late. Meaning it's better to take small profit than get hit with a big loss.
Yeah, exactly. So yeah, smaller position sizes, guys. I cannot stress that enough. And one of the reasons why I'm saying it is, back when the pandemic started to set in, option contract prices, the spreads on them became horrible. A lot of the pricing on those contracts was just so bad with the spreads that you could see that the stock was going to drop. But heck, if you bought a contract, you were already, let's just say if your contract cost $200. Well, some of the spreads were literally like, on the ask it'd be $200, and on the bid it would be like $120. So 1.2 or $1.20, however you want to say it. But the spreads were just so horrendous, and that's how they get you as well. So just keep that in mind. This is also why it's so important to go with smaller position sizes. One, you're immediately going to start off in the red with the spreads. Psychologically, that's tough if you have a large position size. But if you have a smaller size, you can manage it. Also, too, as those spreads adjust, you still have capital to scale in. And if you don't really know how to trade options in the terms of like single legs, and if you're jumping into stuff that has wide spreads, you're going to quickly find out how you could be right with your direction and still wrong in that trade. So, guys, I cannot stress that enough. I know I said it like 5 times already, but small position sizes. Hold on. Get some comments coming in.
About 2 minutes, a little over 2 minutes away from the market.
So, Lewis, you're asking me my sizes are lower than 5%. I'm assuming that's like my position size is like compared in relevance to like my portfolio. If that's the case, I don't, me personally, I don't trade that whole, like a lot of people try to say, y'all don't put no more than 1% of your portfolio into a trade. That's freaking stupid. Yeah, because I really want 100 trades going on. or whatever. I mean, that's stupid. Todd, what are your thoughts on that? Have you heard that?
5%. So
No, like 1%. I see a lot of people talking about 1%.
Yeah, so I don't use a percentage because, like, for example, we're talking about ticker snacks, which I don't know a lot about. I would go small size. But if I was trading Tesla, I know Tesla's predictability and range a little bit better. So I would feel more comfortable having a larger percentage because I know it's not dropping to zero. So for me, it depends on the ticker. It impacts my size a little bit. And I'm also a scalper, so I'm getting in, getting out. So I don't mind having a little bigger percentage size because I'm trying to make scalp trades and base hits the bottom line.
All right, so I'm going to do about a 30-second rundown on this, and we're going to wrap this up. This is ticker ACN. We see that super long downtrend. They got a ton of shares on the market, but they seem to be doing their thing, holding this PPS value at 375. We are starting to get some resistance right up in here, but me personally, I mean, we're still, oh, Jesus, hold on. My bad. I wasn't even looking at this correctly. I didn't even look at the pre-market. Good Lord. Let me zoom out my chart. They have a gap up they were just at 415. I'm bearish on this. I'm just going to go say I'm bearish. That gap up on a stock this size, this PPS value, I'm actually going to look to buy puts in this. I just got to look through the puts and all that. But this is ticker ACN. I'm bearish on it. I believe it's going to print a big red candle today. So, all right, guys, that's the bell. So let's go and wrap this up. We appreciate y'all tuning in. So remember, trade safe, trade smart, and we will catch y'all in the next one.
Be safe, my friends.